Hey, good WordPress people. Welcome back to the WPMRR WordPress podcast. Today, Christie and I are joined by the one and only Brian Krogsgard. So, Brian, thanks for hopping on. Most folks listening probably know who you are by now, but for the few folks listening who are like, who's Brian? Why don't you tell folks a little bit about what you do with WordPress?
Yeah, I appreciate you having me, and I run a website called Post Status, which is a community and news project where we gather mostly WordPress professionals, so people that are either consultants or SaaS providers or product providers, and they chat about WordPress stuff in Slack, and we offer a newsletter, and actually a lot of that newsletter is for free, and we offer a job board as well. So just kind of resources for people that make a living in the WordPress space. We try to provide helpful stuff for them. And I've been involved in WordPress in some capacity or the other since 2008 or so, and 2011 full-time. And since 2015, early 2015, full-time on Post Status.
Yeah, very cool. Brian's definitely you're one of the OGs in the WordPress space, at least from my perspective. I remember seeing you. It was at like WordCamp. It was a WordCamp US. I can't even remember what year, but it was like one of the first years I went. Maybe it was the first year I went. I remember seeing you and being like, oh my God, it's Brian. That's Brian from Post Status. I can't believe that's him over there. And so I definitely remember that.
I felt late at the time, but it was a much smaller ecosystem back then. And, there were, some of the first people that went full time doing WordPress stuff, or, knowing, hey, I could freelance or consult or do whatever full time using WordPress. They were more like 05, 06, something like that. Some of the big agencies started in 08, and I was like a total newbie figuring out how WordPress works in 08. So it took me a few years to become a full-time WordPress person, and I felt late. It's funny how those things are in hindsight. Like, I was still pretty early to this space and what it would become.
Yeah, I think we all probably had that on-ramp of multiple years. I definitely had the same, probably around, 2013, 2014, somewhere around that, maybe a little earlier. Yeah. But Post Status, super awesome. I mean, if people want to be involved in the WordPress community, you should obviously sign up for the Post Status newsletter. I read every one. It's so informative, and it has like everything I want in terms of news and updates. Like Post Status, I'm personally a member, and we also have a team membership so that everybody on our team has access to the Slack channel, like that business channel in your Slack channel, or the business area of the Slack channel.
Yeah.
That's bumping all the time, and I'm always looking at what people are saying in there. So if you're doing business in the WordPress space, that's definitely a place to be. And we post a bunch of jobs on the job board and all this stuff. So anyway, big fan of Post Status.
Well, thank you for the free marketing, because it's kind of hard to market something that is mostly members driven. Like, it's not like super visible. So thanks for the plug, and it is a pleasure to be here with you guys, and happy to talk to you. And by the way, a reverse shout out. I love y'all's podcast. I've listened to so many episodes, and it's always fun. It's a great, such a nice, narrow, but really valuable topic, talking about this general theme of recurring revenue. I know y'all get well outside of that, but focusing on, sustainability with your career and business is really important.
Yeah. Appreciate it, man. And that's actually a great segue in what I want to talk with both of you about today. Actually, I'm excited to do this kind of 3-person episode. We all want to grow businesses that are sustainable in the WordPress community. And a lot of that has to do with like the greater financial picture of what the WordPress space looks like. And so, Brian, you've had some tweets recently, which actually made me want to reach out to you to have you on the podcast just to talk about this specifically, because we have had some recent IPOs and some not so recent IPOs. Recently, we had BigCommerce IPO, and not so recently, we had a Shopify IPO. But that obviously affects the kind of things that happen in the WordPress space. And there's been more and more talk, at least from what I've seen, the past like year or so, maybe a little longer from your perspective, Brian, since you're more in this world, but definitely over the past 6 months. I've seen a lot of talk about what an Automattic IPO could look like. And so, yeah, I wanted to have you on to chat a little bit about maybe some of the BigCommerce IPO stuff and what that means for a potential Automattic IPO. And obviously, it's great to have Christie on here. Most of the time I talk in generalizations, and then Christie, you talk about like super specific, smart, intelligent stuff. And I'm like, oh yeah, like that's what I meant to say, of course. So yeah, Christie, I don't know if you had anything else specifically that you wanted to talk with Brian about today?
Actually, this is going to be the first thing I'm going to contribute to this episode. I haven't said a single word yet, but the first thing I'm going to contribute is I want all of our listeners to know that this is not investor advice, that we are speculating based on our knowledge of the industry, and that by no means should you consider this any kind of actionable guidance for your portfolio in the future or right now. It's an important disclaimer.
Yes. Thank you for adding that, Christie.
I know the law.
We don't want to be responsible for anybody putting their life savings into a Automattic IPO and it not doing as well as I thought it would. So,
but I think
very cool.
There's a lot of space in here for groups of people, especially people who understand the outside ecosystem as well as this sort of still close-knit and not fully understood ecosystem, to have these discussions and start guiding the more and more eyes that are looking at the space. So I think that's really exciting. I think that's what you're alluding to, Joe, that this is a topic that is particularly interesting to me because my introduction to WordPress was so different from, I think, both of y'all's. I got thrown into the fire. I don't even know how it happened. I woke up one morning, I got kicked into the deep end, and I think my second WordCamp that I went to, I remember I told Joe this story before, people started coming up to me being like, what's it like to work with Josh Pollock? And I remember I called Josh and I was like, Josh, not to be weird, but like, are you famous? And he was just like, and he was like, and so my experience was always from the product development and product management standpoint. And it was always from already looking at this sort of growing ecosystem and looking at the big players. And I have done a good amount of explaining what's going on in WordPress to varying degrees of success to my former finance professors, to my colleagues outside of the industry, to my colleagues in adjacent industries like nonprofit technology, like technology investors around the places where I've lived. And there is so much potential here that we're still not talking about. And that's super interesting to me.
Yeah.
Yeah. I'd love to hear some more details about that as we chat about, as we have this conversation, Christie, maybe some of the things that haven't been talked about yet. Let's start on the BigCommerce IPO. Brian, maybe you can tell folks who don't exactly know what an IPO is, like what an IPO is, and then maybe we could chat a little bit about the BigCommerce IPO specifically and how that's affected our space. Christie, you mentioned before we started recording a few things about like what happened during the IPO of BigCommerce. I'd love to talk about too. But Brian, let's start with you because I'd love to hear your thoughts on that whole situation.
Yeah. So an IPO is an initial public offering, and if you really want to talk about what it is, some people say it's access to like retail investors to own portions of a company or broader spectrums of investors. The other side of that is it's what's called like a liquidity event for early investors, because essentially a portion of the company is being sold to public shareholders for a price, and it's establishing a public market value for the company itself. And that's based on a variety of factors, their current revenues or lack of revenues. Oftentimes we have IPOs now where they're not making, they're probably making revenue usually, but they may not be making a profit yet and things like that. And there are these, financial statistics that you can apply to a company, and it helps people decide whether it's a good investment, what the future growth looks like. And you end up with this dollars per share, and then a total number of outstanding shares that people can buy or sell. Now, your old school investors, the people that founded the company, the friends and family, angel investors, Series A investors, VC people, whoever had shares in the company in the first place, this offers some of them an opportunity to execute those shares, and they can sell their shares. Some of the shares of the company are sold with the listing itself. These kind of primary shares in the IPO. And so it's a dual event. Somebody like me, for instance, I might be a retail investor and say, you know what, I want to buy $1,000 of BigCommerce because I know the space, blah, blah, blah. And I buy it on the first day it's available in the public market. I'm buying it from those people that had an early stake in the company. And it's their chance after 5 or 10 years or whatever, building this product or being an early investor, an angel investor, to take some off the table and take the profit home. So that's essentially what happens during an IPO. From this point forward with an IPO, they have, and this is something I think is really worth discussing with Automattic, is there is an enormous amount of scrutiny required to exist because this company is now, they are now owned by the people, right? The public entities, individuals and institutions investing in them. So they have a whole new slate of reporting that's required. So they have quarterly reports and they have other reports that they have to put out. So now things like their numbers all become public. So you find out, okay, well, how much does BigCommerce or Shopify or Automattic, how much do they make? What were their profits? What are the key figures that are required in some of these regulatory filings? And
is this sorry to interrupt for a second, but just to make sure I clarify, is that just for publicly traded companies, just for public companies, and it is not true for private companies, right? So I just want to make sure: does Automattic release all these things right now, or do they not? Because I was under the impression they were still private, and so that they don't release these things yet.
That Automattic does not release them. So that's one of the big things that will occur when Automattic goes public, and one of the things you learn. Because they have to file them, you start to learn them once they're public versus when they're private, we make assumptions based on all kinds of stuff, in terms of how much money somebody makes or what their valuation is based on the latest round, things like that. So what we learned with BigCommerce was that their revenues were between, about $35 million a year as they went public. And so you learn those things as they file an S1, which is kind of like your document to, and Christie may help me with some of these things, but like it's essentially your document saying, here's our case for going public and the stuff you need to know. You have to file some of that before you go public, and then it helps determine the price. And there's bankers involved in establishing who gets access to that price and everything. And then as you are a public company, you have to file new filings every quarter and stuff that comes out. So you can start to track what's their growth look like over time, what's their revenue, what's their profit, what's their expenses, what's their debt. You get to learn all of those things. And what we've learned in the public markets is that, let's call it competitor products, which is not perfectly accurate because obviously there's a closed source versus open source dynamic here. But SaaS e-commerce companies, which Automattic will fall into that category to some degree, they are receiving large valuations, meaning the price relative to sales. So the price of the market cap of the company relative to their sales is really high because people are anticipating significant future growth. And that is what we saw with BigCommerce is despite, $35 million in revenues, their actual valuation is in the billions, and so like people are really valuing these companies as if they're going to grow a whole lot. And we'll see that shape up with Automattic as well. So anyway, that's an IPO. That's kind of how people start to look at it. And the next big thing is around the attention and the scrutiny. And this is what one of the things I mentioned in a tweet was, we know like scrutiny in the WordPress space now is like maybe PostStatus or WP Tavern, or in a big story like a TechCrunch covers it in an article. that is nothing compared to what you get from investor scrutiny from public market investors. And, you know, the Wall Street Journal is like the kind of the high end of who's talking about you from a journalistic perspective, or, you know, hedge funds with $100 billion under management are asking you questions on your calls. It's not like me or you guys talking to Matt Mullenweg on a podcast. It's a much higher pressure type of situation. And that added scrutiny is going to cause ripple effects and ramifications across the WordPress economy, as you can only naturally assume.
Yeah. I just kind of recently got into like Robinhood and have my few stocks on my Robinhood app, and it's super interesting to see all those ripple effects you're talking about, because like one thing a CEO says could cause someone to like downgrade their stocks, and then everybody reads that thing, and then a lot of people sell, and it's pretty crazy how like around the market and how a lot of it works around like confidence in growth opportunities or non-growth opportunities. Christie, you were talking a little bit about how BigCommerce performed on its first day, which I thought was pretty interesting, and probably has something to do with what Brian was mentioning about its big market cap compared to sale or prices today. But maybe Chris, you want to talk a little bit more about the first day of trading?
Yeah, it was super interesting, and it has everything to do with what Brian was talking about, which was when an IPO or a direct listing happens, there is a set price that comes as part of that process. And then the market price is something different that's driven by how many people want this, right? In the most simplistic of terms. And what we saw with the BigCommerce IPO was that by the end of trading, so trading happens during a specific window of time in the Eastern time zone, 4 p.m. is the cutoff. The share price, so how much one chunk as defined by that first IPO cost, had 4x'd the original listing price that day when it went live. This was really big news, right? It spoke to, first of all, the community wider outside of the sort of space in open source e-commerce of WordPress. Even of BigCommerce, I kind of have a hard time being like, they're WordPress, right? Like they have BigCommerce for WordPress, which is really important to note because it adjusts and attaches additional attention to the WordPress ecosystem. But BigCommerce also has their own sort of self-standing SaaS product that's very similar to Shopify. And so it pointed to the larger financial community as a whole that this is a huge growing space. A lot of the time what you'll see is that people will say, well, what are companies like BigCommerce? And that's what we're looking at, because we're going to look at that historical pattern and we're going to say, hold on, are there other opportunities in the market coming up like this? What are some currently privately held companies that could IPO and open at this level and then close at this level? And that's what we're here talking about.
Yeah. Does that mean, Christie, that if at the opening bell of the day BigCommerce IPO'd and I had like bought $10,000 worth of BigCommerce, I would have ended the day with 40,000? Or is that not? Well, okay. One of you is nodding and one of you is kind of saying no. Maybe it's somewhere in between. Brian, is that kind of it?
The answer is kind of both. Now, you, Joe, the answer is no, because the public never truly saw that price until it was listed at 70 or 80. Now, these companies, there's different methods, but these companies typically have a bank that is managing the listing on their behalf. So the shares that were initially sold, when it's priced, they are pricing it at something, and then it's a matter of what the market determines is proper. Someone got those shares for the $25 or $20, whatever that listed price was, but then it immediately lists for 70 or 80. The first people that then buy it on the public market, they don't actually get that. So yes, some people got that price. The people that lost are actually the employees and the founders and the early investors who essentially proffered those shares for the listing price. So they, in that agreement with the bank, they agreed to sell it for $25 a share. So their listing partner made a mistake, if you will, by not being efficient enough and listing it higher so that those people could get the price they wanted. So the people in the middle, this is all a really complex network and I don't even know how it works fully, but the people in the middle that were able to secure it at $25 or whatever, and then it lists at $80, they made that instant 4X, but those people aren't you and I. Like you and I don't get it until it's actually available to buy on your Robinhoods and your TD Ameritrades and stuff.
So to add to that, I nod because if you are a robot, which is how most of those transactions are executed today, right? Like forget the sort of image that we love of the hedge fund manager that's poring over reports. If you are a robot, which is how most of this industry works right now, financial engineering is how this works, then in theory, in the best possible case scenario, you 4X that investment that day. That didn't happen for most people because it happens over time, right? So there are going to be entities in the market that buy the initial price and then sell because they're like, what? This just went up this amount. And again, robots, right? I say entities because there are programs out there that will sell that thing the moment it has hit a certain expectation of earnings, right? So then the idea that the market price is different from that initially listed price is that you're going to have people buying and selling and buying and selling and buying and selling. And if the fervor is big enough, then that price is going to go up and up and up and up. More people want to buy that, and people are selling it at a higher and higher and higher price. So that's kind of what happened in that space, right? Could you have done it on Robinhood? No, unlikely. You would have been remarkably lucky. And then the other piece that's important, and I think people want to consider when they think about what it means to observe the stock market, is that even if you had somehow gotten in, right, and you had fully realized that first day earnings, and you had fully realized that headline, you would not actually have realized that money unless in that moment you decided to then sell. Right, so you would have a portfolio that's worth however amount of money, but that's not liquid.
Right.
And so I can't say, oh, you would be 4x richer, right? That's not exactly how we would value those kinds of actions.
Yeah, that's what I always try to remember that when I'm looking at my Robinhood accounts. Like, I don't actually have this money. It's just kind of like poof, like in the air kind of. Unless I sell it, the money is not actually in my bank account. I think about like Wolf of Wall Street and how at the beginning Matthew McConaughey is like, we take our like cold hard commission, and they like think they're rich, but then we just give them some other idea to invest in something else, and they never really realize that wealth. So I think that's an important point, Christie.
Right, and that's sort of like the difference between realized and unrealized gains, and that's sort of an important term for people to know and familiarize themselves with as you think about what value means in this context, which is very different from value that many of us are used to, which is just this idea of cash.
Yep, agreed. Okay, so we talked a little bit about the BigCommerce IPO, 4 times, first day of trading. Some more complications there, according to both you said, but in general, that is what happened. Brian, what do we think about BigCommerce now? Like, what has changed about BigCommerce? How has that affected the WordPress space in general? Has that changed anything, or is everything kind of the same? And then there are some people who are now richer because they own a significant amount of BigCommerce.
Nothing major. So I think all of that was a decent exercise just for understanding what happens like once you go public and what it means, we want to take away from that, and what it means for a company like Automattic is, minus the fact that the structure of their products is significantly different. Like Automattic, you can't look at it like a pure SaaS the way you do for Shopify or BigCommerce. It's like you shop, you sign up, you pay $30 a month, you get a store or something like that. It's a little different. Automattic is a much more complicated business model with a hybrid SaaS and software and whatever else, tons of nuance in the way Automattic makes money. However, what we can glean from it is that the public markets are valuing companies in the e-commerce space really highly. And what we can know is that Automattic last raised $300 million at, I think, a $3 billion valuation to sell 10% of the company to SalesForce. Based on what we've seen of BigCommerce and their tiny market share of e-commerce and websites broadly, Automattic is probably worth a lot more than where they last raised money from Salesforce. Despite being a more than 15-year-old company, they have both established revenues, long runway, so they're not like losing a ton of money, and which could bring down their valuation. And they are probably last valued at a attractive price versus what they could demand on the public market. All of this pushes towards probably some pressures for them to go public sooner than later for a variety of reasons. They have shareholders, particularly long-term venture capital partners, that have been invested for 14 years. If you look at like True Ventures and Tiger Global and a couple of the big participants, who are going to want that liquidity, like that was the word Christie mentioned earlier. They are going to eventually want to be able to take some off the table. And
can you define liquidity for our listeners, Brian? I don't think.
Yeah, so liquidity is your ability to sell something. So if I have, let's say, Beanie Babies, and you look it up and it says, hey, look, this vintage Beanie Baby that you have is worth $200,000 and I have 10 of them. Okay, well, great. I have $2 million worth of Beanie Babies. All right, go sell them. Tell me what you actually get. The liquidity is the ability to actually achieve that $2 million worth of Beanie Babies by selling them. And the liquidity event is your ability to take advantage of that. An IPO is a highly liquid event because that is the whole point, is for shares to move from one person to the other, and a whole bunch of money surges in to be able to do so. If Jeff Bezos went to say, I'm selling 100% of my Amazon stock, he does not have the liquidity to be able to do so. His riches, his personal wealth is tied to his ability to actually sell the company. So liquidity is what you achieve by actually being able to sell it.
Yeah. Thanks, Brian. I did find the original tweet of I remember me like stumbling upon really this whole rabbit hole of like Automattic IPO. And it was actually a tweet from John Jacoby. It looks like he's since deleted the tweet. So, John, I'm sorry if I'm bringing this up and you didn't want people to bring it up, but I don't see your tweet. All I remember is something about a WordPress IPO. And Matt Mullenweg actually replied on Twitter, and his reply was, not this year, period. I think John's tweet was something about, maybe a 2020 IPO or something like that. And Matt Mullenweg said, not this year. And so then everybody was replying to that tweet like, oh my God, like 2021 Automattic IPO. And I guess I wanted to talk a little bit about that. Robert Jacoby is someone who's written about this on his blog, just at robertjacoby.com. He talked a little bit about a WordPress IPO, and he predicted in his post or in his article that Automattic would probably IPO in 2021. I don't know if that was published before this tweet I saw or after, but I guess I wanted to hear both of your inputs on that. Brian, you think that 2021 is the year? I know it's hard to predict these things, but best guess?
Every year from here on out is a significantly higher likelihood than the prior year. I say that jokingly because, I mean, a company has maybe three options, right? At this stage of life, like Automattic. They have raised money, okay? So their investors, they either need dividends of profit from the business to be paid back as shareholders. They need acquisition, and the only real appropriate acquisition acquirers are like gigantic private equity firms or like gigantic already public companies like a Google or somebody like that acquires Automattic. Number 3 is a public offering of some sort. There is some experimentation going on in the world for a new type of public offering that's maybe like a little less greed focused or whatever. But for the most part, companies just still go public, and going public is their best opportunity to achieve the maximum return for their investors, and also put the company in the hands of public investors, which is kind of a tried and true method for capitalism to flourish. So
yeah,
it's been a lot of years. So yes, that's probably what they're going to do. I mean, unless there's like a huge recession again, or whatever you want to call the last one, what we just had, unless there's a huge downturn in the market, the pressure for them to go public will be significant in my mind between 2021 and 2022.
Yeah, that makes sense. I'm on poststatus.com reading a blog post about the $300 million raised by Automattic from SalesForce Ventures. They're, I think, a newer investor. I don't know if they invested earlier on as well.
I think that was
this
their
is the
first
second
one.
or third time they've invested. This is their first round they've participated in. So obviously they're older investors waiting to get their return. But I feel like a company like Salesforce doesn't just put $300 million into something and not expect a return. They have obviously can play the long game on that, but I would think they would invest that $300 million to have an investment at some point. And that's a significant amount of money.
Salesforce has already reaped the rewards from that, not realized, like we mentioned earlier, but from a pure valuation standpoint, that's where you go back to BigCommerce and the way Shopify has been valued and some of the others. I can't imagine a world where Automattic is not worth at least $6 to $10 billion on a public listing. That sounds like a lot of variance. But take the BigCommerce example, $25 pricing, $80 day of, went as high as $150, I think, on the public markets. So like saying 6 to 10, it's not as big of a range as it sounds like, but that means Shopify's already very happy with their investment.
Yeah, I understand the variance. I look at my Robinhood account at like the middle of the day and I'm like, woo, I made $500. And then I look at the end of the day, I'm like, oh, I like made 100 because it went from like 500 to 100. And it's like, oh, okay. So, okay. I'd love to like wrap this up a little bit by talking about, I think about like how this affects us, the plebeians, the common folks.
Yeah.
If WordPress, has an IPO in 2021, $10 billion, I'm totally just throwing out random numbers, not random because you were just talking about it, Brian, but example numbers here. Does this affect us as individual professionals in the WordPress space, or is the next day just the same as it was before?
I think the biggest impact will be what you just accidentally had a Freudian slip about, which was you said if WordPress IPOs, because that is what the whole world will say. They'll say WordPress had an IPO. And that will like, if you think we're mad about the WordPress.com.org stuff now, you know nothing. Like, it will be infuriating. Like, your family will be like, hey, did you get anything out of that IPO? It's like, no, that was a company called Automattic, blah, blah, blah. Like, that, there is going to be so much confusion, and it'll really be a test of how well did Automattic differentiate.com from .org, and what do we really know about how public markets value open source software versus companies that utilize open source software as a core part of their platform. Automattic's going to be a great test in terms of what that means to public markets, how they're valued, et cetera. It'll be infuriating for all of us in the WordPress space for everyone to be saying WordPress went public, and it's like, no, that's not what happened. So there will be an education period over time to help delineate what's going on there and what all that means, and it'll impact our profession significantly, I think. It will also bring a lot of attention to the space, some of it in a good way, and it also might bring new investment to the space. As an example, like, we're already seeing, whether it's Google or Facebook, Amazon, several of those companies are starting to put more attention into the WordPress space, some more than others. Like Google's putting a lot of attention in, for example. I think we'll see more of that, and you can't not do that when you see how much of a percentage of the internet is on WordPress, and you start to treat it like kind of a protocol layer of the web. That's a big part of it. But I want to know what Christie thinks as well. If she thinks if we're on the same page.
I absolutely agree with everything. I want to offer a slightly different perspective. Again, drawing back from my introduction to WordPress was a little bit different than both of yours. That I kind of jumped into the deep end of the pool and have just sort of been like, okay, since, right? And for me personally, as an observer, I tend to stay away from conversations that to me are sort of like speculation. Like a lot of people really like more speculatory conversations. Those are usually the first people to act upon new market developments and things like that. I think I'm more of a observer in a different perspective. And to me, the only thing that I can hang on to and absolutely tack on my +1 to is no matter what, something has to happen with Automattic. These investors are coming in and investors expect a return. They're not just coming in because they believe in the future of the open web. I would love to believe that. I would, but that's not the case. Whether that is an IPO, whether that is the other items that Brian listed, is something that to me is less of a concern, because when you take a perspective look at it from maybe 3 or 4 steps back, what you realize is that no matter what, Automattic, and so therefore the entire industry that Automattic pulls, has entered a maturing stage. There is a conversation surrounding a macroeconomic perspective to how we see verticals with different industries and how those mature, and groups of companies move in the same directions all the time, right? So if we step away from the individual sort of finance look, we can see that the information technology industry as a whole moves in a certain direction, and then that chunk of companies have smaller chunk of companies that move in certain directions, right? And so if you're an old school WordPresser, you're probably a lot more embedded and involved in the .org/.com conversation. By the time I joined, I was one of those people that was like WordPress, and I learned about the .org or .com debacle. And I was just like, oh, that's going to go away in 5 years, and that's because we're already seeing that movement, right? So no matter what happens in 2021, which may very well be an IPO, we are already going to see the effects of that. What the effects are going to be sort of the regular stuff that happens to maturing industries. More interest from investors and other outside capital. Regulation. We're going to see even more competition. We're going to see competition both external and internal, right? So external as in like all these people who previously didn't know about the WordPress ecosystem are going to be like, interesting, there's money to be made there. That's investors, that's both capital investors and also, entrepreneurs and things like that enter. But we're also going to see internal competition, right? So when I started working on Caldera forms, I remember just sort of being like, why is Carl Hancock being nice to me? It was the weirdest thing that had ever happened to me. I was like, okay, that's really odd. And that is because we have a very collaborative space. And I'm not saying this is good. Like, I don't really want this. This is one of the reasons that I've kind of stayed here and really love this, right? Is that we see a lot of collaboration, but we also know that on a very, very macro scale, when we start entering these later stages, we see more internal competition. So we might see less collaboration. If we don't want that, we have to work really hard to prevent that, because that's the pattern that we know happens to verticals as they go through the stages of how industries mature. The other item that I think we will see, no matter what, is probably more interfacing with issues of intellectual property. Another thing that really shocked me when I started working with WordPress more deeply was that none of these companies protect their intellectual property. Now, I'm not talking about copywriting your plugins or whatever, right? I'm talking about trademarking your logos. I'm talking about protecting your material non-public information. I'm talking about those sort of standard practices that I didn't see as much as I started working with people and getting to know people. We're definitely going to see a lot more of that. Why? Because external competition, internal competition, and those outside investors are going to want to document and quantify the value of the companies in the space. And so I think that no matter what happens in 2021, right, are our listeners ready for this future in which, I hate to put it this way, but I love explaining things in simple terms. You're going to have to run a real business.
Yeah, I agree with that. And I think what you'll see a lot of for anyone that doesn't kind of want to step into that arena with all those challenges, this is a continuation of something I called for really starting in 2017, was significantly more consolidation in the space as the bigger fish swallow the smaller fish. And, they pull those experiences inward, for instance. And I didn't even mention about amongst all these public companies or large companies that have a stake, but, people like GoDaddy, EIG, the owners of Bluehost, and some other large hosting companies, some of the experiences of WordPress, they will just start to kind of be their own flavor, right? Like the WordPress.com version will be a flavor. Automattic has multiple flavors of their own. WordPress.com, Tumblr, and WooCommerce will be 3 individual flavors of WordPress eventually. Tumblr's not quite WordPress yet, but you know what I mean? Like those will be individual flavors of WordPress. The GoDaddy version will be its own flavor. The EIG version through Bluehost will be its own flavor of WordPress. Google will have its own flavor of WordPress, where they kind of tuck WordPress under like some version of their umbrella. And we'll continue to see consolidation in order to support that as they acquire the companies that help them enhance the experience within their flavor of WordPress and how they onboard customers. And in some ways, I think that's kind of healthy for WordPress as that, what I call like a protocol layer, which is kind of fun because it really solidifies WordPress as this core tool. And hopefully, open source funding is difficult, but hopefully that further encourages more of these companies to throw significant dollars behind development of the open source software. For a long time, it has been too strongly dominated by just Automattic. Like I would love if there were 4 or 5 companies each with 10 people or so developing the open source software. I think that would be fantastic.
That's your best case scenario.
I think
it is best case. There's a lot of bad case scenarios.
That's your best case scenario. And it would be a fantastic best case scenario. I want the listeners to consider the middle ground that potentially exists and the things to look out for, which are that at its core, WordPress, the open source project, is something that has really dominated our global space on putting stuff on the internet. And when we talk about these sort of markers of maturing verticals, we're also going to see alternative solutions come up. People are going to come up with completely unrelated things that still serve the purpose of put stuff on the internet, sell stuff on the internet, make your voice heard on the internet in a way where you have more control over it than a social media platform, right? And so looking at those core offerings and making sure that you're thinking about them holistically is good, because the ball will land somewhere between the best absolute possible case scenario and the worst possible case scenario. And, that's called hedging your risk. And it's called getting ready to roll with the punches, right? I think it's really interesting. I think it's going to be really healthy. I think it's an exciting time to be, right? But consider that if we're talking about the domination of, a consumer level car, that yes, we're going to be looking at the car market. Yes, we're going to be looking at fuel prices. Yes, we're going to be looking at all of the things that drive the specific vertical as it moves, but you also want to consider that some people will just have bicycles. And where are you going to fit into the larger need for transportation? Think about it that way.
One other note that I'd just like to highlight as something that I think will become much more clear as Automattic starts reporting things publicly, and and the way they're viewed by the public and the way what you see in the numbers is that WooCommerce will be the dominant product for Automattic. I've been saying that for years. Like when they sold it for like $30 million, I was like, man, this is going to look like a steal. And it is a total steal. Like that is a enormously impactful investment for Automattic. And it will be like, they will be viewed as a e-commerce company more than a publishing company if you go purely by the numbers, in my mind, if you look out with a far enough lens, because e-commerce is where people spend money on their websites. Like all the other stuff is cute, but people spend money on e-commerce websites that are making money. E-commerce, we're seeing it become a bigger and bigger part of any individual business's selling front. They're brick and mortar. They're moving to brick and click. They have to. And then there's the ones that are just click, there's no brick. And WooCommerce will continue to grow both in number of stores and significantly in revenue. And to be frank, Automattic has not been aggressively monetizing WooCommerce, and there is a ton of room for growth in that. And I think it's a lot more room for monetization growth than what exists in other product lines for them. And that's going to be a big thing. Like if in the next couple of years, you can't just directly sign up on WooCommerce.com, start your store, and it's my subdomain.woocommerce.com, it will be a huge missed opportunity by Automattic to not do that.
Hey guys, did Brian just say I have a lot of job security?
Yeah, I was about to say Christie is already on top of WooCommerce, but it's you heard it here from Brian first. Well, probably not first. Brian's been talking about it for a while, but you heard it here. Hey, WooCommerce, it's time to think more seriously about WooCommerce. I
first asked Mark Forrester about hosted WooCommerce in 2013. So the fact that it's 7 years down the road and still doesn't exist, I'm like, please, like, I don't even know how healthy it is for the broader ecosystem. Like, you think of the fractures that could occur in partnerships between Automattic and hosting companies, and whether those hosting companies want to continue to support WooCommerce or how they do it or what it looks like. Tons of implications, but it will happen. The numbers are too good in terms of the potential for Automattic. It will happen.
Yeah. Brian, thank you so much for hopping on, man. We're going to have you on again in 2021 when Automattic IPOs, so we can talk about it. But tell folks as we wrap up where they can find you and Post Status online.
I would love if you just go to poststatus.com, and if you are interested in joining the community, just go to poststatus.com/club. It's pretty affordable, and it's a great community where people can talk and collaborate. So thanks for having me so much. I appreciate it.
Yeah, man, you are welcome. The last thing we ask our guests to do is to ask our listeners for a little iTunes review. So, Brian, if you wouldn't mind asking folks listening to give us a little iTunes review, I'd appreciate it.
Yeah, y'all need to go to iTunes, because I have multiple podcasts and you have no idea how much these help. Don't just give it 5 stars. Give it 5 stars and then say like 50 words. Like, I have made so much more money in my business because I listen to this podcast. It is one of the best podcasts that has bang for my buck and to my ears. It's just pleasant. 5 stars and the review. Go do it right now. It's easy.
Yes, thanks, man. Leaving reviews. Leave something you learned about this episode, too. That way we can take a screenshot, shoot to Brian, and thank him. WPMRR.com/iTunes redirects you right there if you are on an Apple device. If you're a new listener, Christie, new listeners can come in and listen to a few older episodes, right?
Yes. You can flip the order from oldest to newest, and you can laugh at how goofy Joe and I were in the first 3 episodes. It'll be so fun.
Episode 1.
Yes.
Go through, binge some old episodes, binge some older content. This is like episode 118, 119 or something. So we've got 100 plus episodes. You can go back and listen to any topic you want around MRR, WordPress in general, building a business, all that stuff. iTunes review, talked about that already.
That was a really
if you have
good
questions
review
for us in the
pitch.
show. Yes, so good. One of our best, Brian. If you want Christie and I to do some more Q&A episodes, Christie and I love to do these episodes. So shoot us questions at yo@WPMRR.com, or you could just tweet at us. I'm at Joseph H. Howard. Christie is at Carol Chirino? No, at XD Chirinos?
XD Chirinos. I don't know where this Carol
XT.
nonsense just came from.
I don't know
Why are
either.
you exposing me on the
So
podcast? Oh my god.
totally misspoke there.
What was that
XD
about?
Chirinos on Twitter. Brian, you're just at Krogsgard?
Yep. If you can spell Krogsgard, then you can find me.
Yep. There you go. Cool. We will be in your podcast players again next Tuesday. Brian, thanks again for being on, man. It's been real.
It's been great. Thanks for having me.